Hi, everyone. Thank you for tuning in to our November monthly market update. If I haven't had the opportunity to meet you, I'm Callie Ritchie, the broker and owner over here at Ritchie Realty. And if this is your first time jumping on one of these, please thank you, first of all, for tuning in. But we really want to provide the information to you, the tools that we learn. We want to provide you what's going on in this ever-changing market that we're experiencing, give you what the experts are saying about the market and where we're headed to, so that you can be equipped with the knowledge and the tools to make the best decisions that you can when you are buying, selling, or investing in real estate. So with that, I really want to just go ahead and jump on in here to share a screen as we talk today a little bit about inventory. Where's our inventory today? What's happening with interest rates? What's happening? I also want to talk a little bit about foreclosures, because I know there's been a lot of people inquiring on, are we headed to a crash? Are we going to start seeing a lot of foreclosures? We're going to talk about that today. But also, if you'll look down at the other videos that we have in this newsletter, or if you're on our YouTube channel, please tune in to what Amber is going to be talking about, which is giving you a wealth of tools that we're aware of in today's market that are accessible to you as a buyer, as a seller, to help get you into a home if that's what you're looking to do, and get it at an affordable price that you can, that fits for your budget. So let's go ahead and get straight on into this. I'm going to first start off here sharing my screen and go straight into what we're looking at with inventory. And when we're going and looking at inventory, what you're going to see me looking at is this North Dallas-Fort Worth area. So I'm looking, well, really Tarrant County, Dallas County, Collin County, and Denton County. Four of our biggest counties here is where I'm pulling the data from. Because if you're looking at other states and other things, it can be the national, it can be a whole lot different than what we're experiencing here in our local market. So I want to start with this quote by Danielle Hill that says, as the rapid run-up in rates reshapes housing market dynamics this fall, both buyers and sellers are taking a step back to recalibrate their plans. And we've definitely been seeing that. Excuse me. Home shoppers are looking at a monthly mortgage payment that is roughly $1,000 higher than at this time last year, and incomes are rising, but not by that much. And I wanted to start with this because that is truly what we're seeing. We're seeing a lot of buyers and sellers kind of taking that step back, going, you know what, maybe this is not the right time for me to sell my home or purchase a home. And we are definitely seeing that shape some things that we're seeing with our inventory and what's happening in our housing market. So let's take a look at that. This is the number of sales for starting from January of 2022 and going all the way through where we are currently. So in the blue, or the light blue, if you would, we have the number of sales that has been occurring each month to month. And then in the red, we have new inventory that's hitting the market. That's not the active inventory. That's the new inventory that's hitting the market. And as you can see, back at the beginning of the year, that number of sales was pretty tight with the new inventory that was hitting the market. So that new inventory was quickly being absorbed by the buyers in the market. And we really started to see that change come about May and June, where we still saw this. We saw the sales slightly incline, which is very seasonal, if you would, that we see typically during the summer months, and then they usually scale back down. So, but we've seen those pretty consistent, whereas our inventory really shot up, as you can see here in May and June. We started to really, June, we saw the big height. And I really believe not only is it seasonal too, that we'll see more inventory hit the market during the summer months, but I also think what happened and what I experienced from a lot of our own sellers was people were anticipating this to happen. They knew that interest rates were going to go up and it was going to reshape the market. And so we personally had a lot of sellers who might not have sold for another year or another 2 years, but said, hey, I believe that this is going to be the height of our market. And if we want to get out and get the most money out of our house, we're going to go ahead and get it on the market now. So we started seeing people really do that in June. And unfortunately, some people were saying, oh man, I wish we would have done it a couple of months before that, because June is really when we started to see the market start to change, if you would. But what's interesting here, like I said, and don't pay too much attention to the November because we haven't obviously finished out our November sales. But as you can see, we have since June at least really been seeing a rise of that inventory in comparison to the number of sales that we have seen throughout the year. So what I want to do here is go back through the amount of sales and the new inventory back since 2019, pre-pandemic, if you would. And as you can see, our new inventory we've got here in the red, and you kind of just see how it shapes like this, little slope here, and we've started to see that rise back up. And then our number of sales, though, has stayed relatively pretty steady throughout the 4 years. We don't see a big rise. Now we do see some fluctuation, of course, throughout the year, and that's going to happen no matter what. But we're not seeing a very steady, slow rise that we're seeing with the new inventory that's hit the market. A few things I want to point out here is that you can see right here, we probably had our highest number of sales back in June, July of 2020. And that was after the pandemic hit in March. And we had a big rush of people wanting to get out of their house because the pandemic really shaped how people wanted to live and what kind of home that they wanted to live as they became more, officing from home and in their homes more often. So we saw that really spike during that summer month of people wanting to purchase homes. And then it was just kind of been steady, if you would. We do definitely see a drop in our sales, which we're going to go over that a little bit more in detail here. We're starting to see them come down. But what also is interesting that I want to point out is, even though we saw the greatest number of inventory back in 2019, we saw that drastically come down, which really affected the home prices as well. And as you can see in 2021, that the number of sales and the home prices were the number of sales and the inventory was very, very tight, which really spiked those home values. Started to spike those home values in 2021 and in the first part of 2022. Now we're seeing, with that rise of inventory, a bigger gap between the number of the sales and the inventory. One thing I want to point out, though, and we're going to take a deeper look at this as well, our inventory is still less than where we were pre-pandemic. And you're going to hear me say that quite often. So let's go to our next slide here and look at just an isolated look at where the home sales have been since pre-pandemic in 2019. So you can see here, for pre-pandemic, that's the lowest amount of sales that we've had for the past 3 years. And we can see in 2020, again, we see that big spike of home sales that we just discussed back in July of 2020, when people were ready to find a new home that would fit their stay-at-home lifestyles. So we saw that it was the biggest spike that we had seen. But we can definitely see that in 2021, we still had a very steady amount of sales. We saw those spike on the red line here, which is this year. We saw them spike, and now we've seen them start to come down, lower than where we have been the last 2 years. But again, higher still in the number of sales than where we were pre-pandemic. And that's one of the takeaways I really want to share with you guys as we continue to look at, even as we go forward into the inventory. So that was the number of sales. Let's take a look at what's happening with the inventory. And as you can see, it has pretty been pretty tight with year over year on how things have shaped out. We can see the new inventory here in the 2019 pre-pandemic. As you can see again, more inventory than where we have been, even where we currently are today, or when we closed out in October. The new inventory that's hitting the market in October of this year is less than the inventory that was hitting the market before the pandemic. We did see again that big spike, like we just discussed back in June of this year, as people, seasonally were getting ready to put their houses on the market, but also I think a little bit more pushed on by people's fears that the market was going to start turning and wanting to capitalize on the gains of their home before the market started to shape. So again, let's take another look, though, at the active inventory. And so that was what the new inventory hitting the market. Now we go to taking a look at not only the new inventory that's hitting the market, but the overall active inventory. And we know and we can show that it has been on the rise. We are currently sitting at about 3 months supply of inventory. And if you guys have been following along with me, you'll know that when I say 3 months supply of inventory, that is still a very strong seller's market. We're not into even a balanced market until about 6-7 months supply of inventory. So we are still at a very strong seller's market and still low inventory, contrary to what people believe. Now, with the new, earlier this year, as you can see here in the red, earlier this year, when we had the lowest amount of inventory overall, the 4 last years, that's where we were at like less than even a month supply of inventory. We had weeks, which really just put a lot of pressure on home values to raise. So now we're seeing more inventory. There are more options for our buyers. That's wonderful. But as you can see again, our active inventory is still significantly lower than where we were pre-pandemic numbers. A little higher than where we have been the last 2 years, but still lower than where we were pre-pandemic. Now, we do see normally a rise of inventory as we get into the November, December, January months, and in February we'll start to we'll keep a close eye on this to see what happens with our active inventory. I do believe, and hear me say this, I do believe there's great potential with the continued pressure on interest rates, which we're going to get into here in a bit, and what's happening in the market. I do believe there's great potential for us to see 4 months supply of inventory by the end of 2022 and going into 2023. Again, nothing to be worried about, because if I was to show you a month supply of inventory over the past, 10 years, even in the past few years pre-pandemic, we saw 4 months supply of inventory. We never saw 5 months, but we did see 4 months supply of inventory. And it might shape and last for a month, 2 months, we'll see. But we are not there yet, even at 4 months supply. Etching that way, but not there yet. So let's talk a little bit about, now that we know supply and demand, and how that affects home values. And so where are we at today in relationship to year-to-date home values? And like I said, we really saw those shoot up about May, and May was that pivotal month where when interest rates started to rise. And that's where we really started to see things shape. But as you can see here, year to date, we started at a median value of $316,000. Again, this is for Dallas, Tarrant, Denton, and Collin Counties all combined. But we did see that drastic rise in values from 316 to 371, and we've started to see those come down a bit. Pretty stable in July and August, a little bit down in September, and a little bit more down in October. So a rise at 371, now we're at 340, but here's the deal. We are still year to date at a higher median home value than where we were in January. So I know some people think, well, home values are coming down. Yes, they are. But when we look at appreciation, we really take that as a year over year value. And so as of where we are today, we are still ahead of the game than where we started at in January. So looking at that year over year pricing here, in the blue, we have 2021, and in the red, we have the 2022. So we saw, consistently a rise, if you would, back in 2021, little dip during that August, September month. And that's typically a seasonal thing. And then we saw them push back up and through December. And then, man, what happened the first almost 2 quarters of 2022, a huge rise and seeing them stabilize. But as you can see here, even in November, even though we haven't finished up November, we're still above the values than where we were in November of last year. This year in 2022, when we finished out October, we were still year over year ahead on the median sales price than where we were last year. So for those of you that were very fearful of, home prices just completely crashing, we're going to get to that here in a bit. Just really, if you take it out as a perspective year over year, on home values is the best way approach to it. Unless you bought here in May, then yeah, you might be a little stressed out. But again, owning a home is not a short-term commitment for most. It's not a month-to-month thing. It is typically people stay in their home for 3 to 5 years. So over time, I don't want people to be worried about that. So let's go into talking now about interest rates. And, that is the talk of the town for everyone is interest rates, because what happened this year has never happened like this before. And I think even the economists were kind of thrown off with the way that the interest rates have risen. Why did interest rates rise? Guys, if you are just now hearing this, it's because of inflation, and the Feds had to do what they had to do to tame inflation. And with home values going up, skyrocketing, becoming so unaffordable, rising at a rate that is higher than what people's income was rising, making things so unaffordable. So we saw them beginning of the year rising from 3.22. And as of November, I think this was the first week of November, rates were at 6.95. And yes, when that came down, this last rate drop, it seems like the markets just opened up over the last week or so. So that's been good news. And boy, would we like to see that. But where are things really going? What are the experts saying is going to happen with rates? And so before we go into that, I do want to just point this out that this from Freddie Mac says the U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year. That's the biggest year-to-date increase in rates in over 50 years. So this is something that this has created a market, if you would, that a lot of us haven't chartered before. We can go back into history and see how history has responded, but that's the biggest year-to-date increase in over 50 years. So that's why I say with this volatility is something that we're really keeping our eyes on, because we just don't have a lot of history of what's happened when you've doubled the interest rates from where they started at the beginning of the year. Also hear from Realtor.com, with inflation still running at a 40-year high and the Fed expecting a few more rate increases to combat it. Yes, that's right. Mortgage rates will experience upward pressure through the end of 2022. Now, I have to say this. We have known since last year that rates were going to go up in 2022. We did not know that they were going to go up at the rate that they did. The experts weren't even predicting what has happened here. But I remember in the very beginning of the year, saying, if you're going to buy a house, do it now, because rates are going to go up. And they certainly did. And what we're hearing today, because this is something that I I'm hearing from a lot of, I'm going to stop sharing my screen here for just a second, because I really want to talk to you, because I know a lot of people have been on the fence saying, well, we're going to wait until the rates drop. And here's the thing, they may not drop this year. I'm hearing some word that maybe it will be later on in next year, but we could see them go up before they come back down. So we're going to keep our eyes on that and see what happens with rates. And as you're trying to make that decision of, should I, purchase a home right now? Should I wait? We're going to talk about that and address it, because it also has something to do with home prices and what's going to happen with home values. So let's keep going on here. And this is the one promising thing that I do want to say from our chief economist over at First American. While mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. And I would agree with that. We follow Mark Fleming quite often, and I couldn't imagine us trying to go up to rates to where they were back in the early 80s to over 18%. So let's just talk a little bit about, well, what's going to, recession. We've heard a lot of discussion about recession. Are we in a recession? Are we coming to one? There's, we're not going to go into that topic today. But another piece of hope I want to give to you here is that recession means falling mortgage rates. So again, we can go back through history and see with the last 6 recessions that we experienced, what happens is we see the rates come down. And that's because after they tame that inflation, then they no longer need to keep the rates up to where they are, and we can see them start to come down. And that's what it's expected here in 2023. But the latter part of 2023 is what we are hearing at this point. So what are the experts saying about home prices? Because we've already seen them start to come down. What are we looking at for home prices? So I do want to start off with this from Redfin. For those bearish folks eagerly awaiting the home prices to crash, you'll have to keep waiting. As much as demand is pulling back, supply is as well, reducing the downward pressure on prices in the short run. So we've seen that downward pressure on home prices, and I really think that is very possible. We've the just like interest rates going up. I think the big increase or the big drop in the home prices that we have been seeing here in our area in Texas, I think that big is behind us for the time being. And that is because as we look back at that supply, new inventory, supply and demand, new inventory hitting the market, and talking about people kind of pulling back about selling their home, pulling back on purchasing home. So that pulling back on the inventory and the supply is reducing that downward pressure. We're still got some downward pressure, but it is reducing some of that downward pressure on the prices. So what's forecasted in 2023? And again, this is something that I'd have to say we follow every month, every week as new information comes out, because it has been drastically changing. And if you saw earlier this year, the forecasters were saying, no, we're going to continue to appreciate. And then as we started seeing the rates go up the way that they did, and again, I don't think people anticipated them to go up to the point that they're at. Forecasters have started to change. And at first, Zelman was the only one that was saying we're going to see prices drop in 2023, whereas all the other forecasters were saying, no, we're going to continue to see some appreciation. Now we're starting to see Fannie Mae and Freddie Mac also forecast some depreciation. But here's the thing, guys, very important to tune into. If we look at this across the board, it's really kind of just a stable, no movement, if you would. And 2% appreciation, 2.6 on the high side here, down to 5.1 depreciation. Is that going to be enough to prevent you from wanting to jump in to home ownership? And this is where I think aligning yourself with a knowledgeable realtor and a great a loan officer is going to be key for you in helping you kind of work and maneuver through these different forecasts here and helping you set yourself up for success, if you would. So let's talk a little bit about what the big banks. Now, the big banks now here are calling for more. That's the, the forecasters here, Fannie Mae, Freddie Mac, Zelman, all NAR, all those. Now the big banks are forecasting even more depreciation. So I just want to kind of throw that out there. But again, if we look at Wells Fargo here, who is saying 5.5% depreciation 2023. This is totally different. And this is something really important to hear. It's totally different than where we were in 2008, because this is a 1 year, while 2023 might be kind of an unstable and a, rocky road, if you would, on prices and interest rates. 2024 is looking much more positive. So we're going to see that rebound. And if we were to look at, I said, back in 2008, what happened? And there was a lot of different things that were so different back during the crash of 2008 than where we are today. And a lot of it has to do with the lending practices that were in place back then and compared to how they are. They've tightened those things. It was the lending practices that put us into that position. Whereas now those things have been tightened, and we don't forecast it happening. We're always going to see a dive, and, all the time in history, we're going to see that. But what happened then is we had 5 years of depreciating values. That's what the difference is. We're talking 1 year, if it happens. Okay, 1 year, that might be a little rocky, but 2004 moving right back up. And as we get into a discussion here at the end, should I buy a home right now? Something to be into consideration. So I've heard a lot about foreclosures, and I started hearing about we're going to have this big flux of foreclosures back during the pandemic because, people were being bailed out of their mortgages, and, we had a lot of stuff going on, forbearance, all those different things that were put into place that people thought, oh my gosh, we're going to, after forbearance, we're going to see a big, huge rush of foreclosures. And that never happened. And now where are we at today? And I still hear a lot of people saying we're going to get inundated by foreclosures. So let's take a look at this. So we saw, again, that market back in 2008 completely different than where we are today. And as you can see, that was the biggest rise in foreclosures. That's when I got into selling homes. And I remember picking up some foreclosures myself. I'm not opposed to them. I think it's a great, for an investor. Unfortunately, not, they do happen. And I know investors were picking those up. But guys, look at what's happened since the lending standards have changed. We have seen a drastic decline in the foreclosure activity. Year over year over year, it has gone down. And even in 2021, we saw less. So where are we going to go to here? Let's talk a little bit about it. So this comes from Adam data. So only about 214,800 homeowners were facing possible foreclosure in the second quarter of 2022, or just 0.4% of the 58.2 million outstanding mortgages in the U.S. So if you really think about that, guys, that's 0.4% of a percentage point of people who are facing foreclosure the second quarter of this year. That's not a lot. And if you sit down and you talk with, mortgages, people who are running the mortgages in their portfolios, they budget for about a 1% rate of foreclosures within their portfolio. So 0.4% is even under what the banks budget for in their portfolio. So going on with this, of those facing foreclosure, so here it is, of that 0.4% of the population facing foreclosure, about 194.4 or 91% had at least some equity built up in their homes. So this is where we really have to educate those that might unfortunately be experiencing some distress with their home. Please, if you know of anybody in this situation, I've seen this happen over and over again with people that I've helped personally, is they don't understand that they could have the equity in their home without having to face the foreclosure. Guys, don't let the banks take back the money. If this is your asset, get it sold, get with your realtor, give me a call. Let's sit down, let's talk about it, because 91% of those, that 0.4% has equity in their home and may not even have to face foreclosure. So question is, are we going to see a lot of foreclosures hit? I'm going to let you make that decision on your own, but I will end with this here. Anyone waiting for a huge foreclosure wave will probably be disappointed by this report from Adam Data. Foreclosure activity was flat Q1 to Q2, and foreclosures stats dropped slightly from August to September. So even in the third quarter, we saw the foreclosure stats drop. So if you are waiting and hoping to pick up on that foreclosure, again, we've already talked about, yes, inventory is up, but we're still lower than where we historically have been, even pre-pandemic, which was already low inventory. Those that are in foreclosure might be able to sell their house because of the equity. And if there are foreclosures at this point in the game, they're going to be quickly absorbed in today's market. So I don't think at this point, we're not going to see foreclosures have an impact on home values or in the market. We're not seeing it. So should I buy a home? Should I buy a home right now? And that is a question that we get asked all the time. And we definitely, like we said in the very beginning, have seen a lot of our clients pull back because they're wanting to wait and see what happens with the market. And that's totally understandable. And yes, absolutely, this market has pushed some people out of being able to afford it, especially with the rise of prices. And even though they're coming down, they're still pretty high for a lot of people. And to put that along with the high interest rates definitely has been a challenge for some. Now, if that is you, again, I want you to stay tuned. I want you to hear what Amber says on this next video about some options to help you get into that home, because there's options at still a very low 4-point-something% interest rate. So we've got some options out there for you. So let's talk about, what is the other alternative to purchasing a home? Well, if you're not you got to live somewhere. So unless you're packing a bag and sleeping up under the bridge or back at home with mom and dad, then your only other option is to rent. And guys, what we know has happened with rental prices over the years is, look, they have skyrocketed, and it's a supply and demand issue. And we've seen a lot of people, a decrease in the amount of rentals that are out there inventory wise, because people are eating those up. We've seen a huge supply and demand thing and rates on rentals skyrocketing. So something to consider as you're thinking about, even though interest rates might be high right now, is that if you can afford, and I don't know if I've got it on here. This is the great quote here. I love this. And it says, if you can find a house that meets your financial expectations for a monthly payment, and it's a good time for you to buy, then do it. Just do it. And if you wait for prices to fall, but they never do, you may discover the hard way that the house that you found a year ago that you really, really, really loved, that you could afford, but you passed it up, is more expensive the next year. So the thing here is, if you find that house that meets your needs and you can afford it, even at the interest rates today, just do it. Because interest rates or your monthly mortgage payment is going to be consistent. Now, I know taxes may, increase or maybe even decrease your value, your mortgage payment, but it's pretty much going to be steady. Okay. Whereas when we go back to rental prices, guess what's going to happen with them? They're going to continue to rise. So look at it, is it a good time to buy? I think if you can afford to do it and you're happy with the monthly mortgage payment, do it. And then let us put you in touch with Amber so that she can show you how to get the best of what we can do for the interest rates. So that's all I've got here for today. I hope that you guys picked up on a piece of information that helps you, gives you more knowledge, more tools under your belt to help you become the very best when it comes to buying, selling, or investing. Stay tuned next month. We're going to talk a little bit more about the end of the year, kind of wrap up here, selling the home during the holidays. We're going to go right into all of that next month. Until then, happy Thanksgiving and happy November. Bye-bye.